While many see Bitcoin as a volatile investment, its journey is revealing a much bigger story. It's evolving into a cornerstone of a new financial world, moving from a speculative asset to one woven into the very fabric of global economic infrastructure. The real revolution is happening in two parallel realms: the everyday lives of individuals and the highest levels of institutional finance. Bitcoin's rising role in daily life. For consumers, Bitcoin's practical utility is moving far beyond a digital gold narrative. Think about it. Around 65 million Americans, roughly 28% of adults, now own cryptocurrency, a number that is nearly doubled since 2021. These people aren't just holding, they're starting to use it. A major US cinema chain accepting Bitcoin for tickets is more than a gimmick. It's a signal of growing retail acceptance. This adoption is fueled by accessible new tools. You can now get credit cards that earn Bitcoin rewards and use sophisticated wallets for easy payments. The belief in its future is strong. In the US, 60% of people familiar with crypto believe its value will rise, and 46% think it will achieve mainstream adoption.
However, the most profound everyday impact isn't in the Western world's stock portfolios. It's happening in emerging economies. In regions with volatile local currencies or limited access to banking, cryptocurrency is a vital tool for stability and connection. Companies like Yellow Card in Africa report business transaction volumes surging from $1.7 billion to over $3 billion, with over 99% of transactions being in stablecoins, cryptocurrencies pegged to stable assets like the US dollar. This isn't about speculation, it's about survival. It's a street vendor in Kenya paying an overseas supplier for goods, or a family receiving remittances from abroad quickly and cheaply, bypassing expensive, slow traditional systems. These everyday uses are beginning to touch many lives. Financial protection, using Bitcoin as a potential long-term hedge against inflation in local currencies. Global commerce, businesses, especially small to medium enterprises, using it to settle international payments without exchange rate hassles.
Empowering individuals, from supporting content creators with direct crypto tips to using it for travel bookings and in gaming economies. Earthly Bitcoin's integration into the global economy. While individuals are finding new uses, the world's largest financial institutions are making a historic and structural bet on Bitcoin's future. The key shift has been regulatory clarity. Major economies are moving from hostility or uncertainty to creating frameworks. The US saw a landmark change with the SEC's approval of spot Bitcoin ETFs in early 2024, creating a familiar, regulated pathway for massive institutional money. This was followed by the passage of the Genius Act for stablecoins in mid-2025. This new policy environment, with other nations like the EU rolling out their markets in crypto assets or MiCA regulation, has unlocked the gates. The scale of capital poised to enter is staggering. Analysis suggests that a modest 2 to 3% allocation from global institutional and retirement funds, a pool exceeding $100 trillion, could generate $3 to $4 trillion in new crypto demand. To put that in perspective, Bitcoin's entire market value in late 2025 is around $2.2 trillion. This demand faces a strictly limited supply, with only about 700,000 new Bitcoin expected to be mined over the next 6 years. This powerful imbalance is leading top investment firms to describe Bitcoin as transitioning from a speculative asset to a strategic allocation. This institutional adoption isn't just about buying and holding, it's about integration. 401k and pension plans, firms like Fidelity have already started offering Bitcoin ETF options in select retirement plans. Banking services, major banks are developing custody services, using Bitcoin as loan collateral and exploring blockchain-based settlement systems. Corporate strategy, following the lead of companies like MicroStrategy, more corporate treasuries are considering Bitcoin as a part of their reserve assets.
The balancing act, promise versus peril. This rapid integration brings enormous promise, but also serious challenges that must be managed. On the promise side, the benefits are clear: a more inclusive global financial system, dramatically cheaper and faster cross-border payments, and a new, programmatically scarce asset class for portfolio diversification. For millions, it provides financial tools they never had access to before. The perils, however, are systemic. The International Monetary Fund (IMF) notes that while stablecoins, often the entry point to crypto, offer efficiency, their widespread adoption, particularly of US dollar-pegged ones, could risk destabilizing smaller economies through rapid capital flows and dollarization. Financial stability is a prime concern for global watchdogs. Furthermore, the borderless nature of crypto presents a major challenge for law enforcement. High-profile hacks, like the $1.5 billion attack on Bybit in 2025, show how illicit actors exploit gaps between different countries' regulations. This highlights the urgent need for consistent global rules and real-time cooperation between regulators and compliant companies.
Ultimately, the story of Bitcoin is no longer just about its price. It is becoming a foundational layer in the rebuilding of global finance, from the street vendor in Lagos to the pension fund on Wall Street. Its importance stems from this dual role, empowering individuals at the edges of the current system while simultaneously being absorbed into the very center of the new one. The journey is volatile and complex, but the direction is increasingly clear. I hope this overview provides a solid foundation for your video. Would you like a deeper exploration of any specific area, such as the mechanics of Bitcoin ETFs for institutions, or a closer look at its practical use cases in a particular region?